Welcome to Procurement Asia. So I'd like to welcome our next speaker, Shahbaz Sultan, who's
Okay.
going to be joining us from Islamabad in Pakistan. So Shahbaz is currently the Corporate Director of Procurement, Hospitality and Real Estate for a group called Hashoo. He's been working for Hashoo Group for over 3 years, both in procurement and corporate in different roles. He was previously working for Nestle in Pakistan as a lead procurement specialist. So Shahbaz, today's session is going to focus on, it's called Making It Count, Challenges in Measuring and Capturing Procurement Savings. So Shahbaz, go ahead, welcome.
Greetings, ladies and gentlemen, and a great thank you, Max, for the introduction. It's a privilege to be here, and I am overwhelmed to see participants with such a diverse background. Uh, Before I formally start my session, a small reminder to you all that you can ask questions using the comment section, which is located below on the page. So today I'll take you through the real life challenges which majority of the procurement professional face when it comes to measuring and capturing the procurement savings. My very own reason for selecting this theme for today's discussion dates back to my initial days at Hashoo Group when I found myself surrounded by three chartered accountants in a boardroom, struggling in terms of explaining the fundamentals of the savings. Therefore, I shall for sure would not like you all to be in a similar situation by passing on the necessary insight, which is based on the best practice and experience. I've structured my presentation into four sections. The first section shall introduce you to myself and Hashoo Group. Then I shall talk a bit about procurement's strategic role in saving money for the businesses. Uh, the third section would be all about savings and issues around them. While in the last section, I shall share the Hashoo's case study and learnings which I derived out of this experience when I embarked on this roller coaster journey. Uh, I'm currently working as a corporate director of procurement at Hashoo Group with influence on 30 billion rupees of annualized external spend. I've got 15 years of experience in supply chain space and hold two charters, one from Chartered Institute of Procurement and Supply and other from Chartered Institute of Logistics and Transport. I shall prefer not to go into more details in the greater interest of time, reason being I am sure that you must have had a look at my profile details when you signed up for this session. The Hashoo Group was established in 1960 by a young entrepreneur, Mr. Sadruddin Hashwani. It initially operated as a trading enterprise, but through its founder's vision, strategic direction, and commitment, the group has emerged as Pakistan's premier conglomerate with diversified local and international business portfolio. From its humble origins in cotton trading, today Hashoo Group has business interests in hospitality, oil and gas, information technology, mining, ceramics, pharmaceuticals, real estates, and commodity. Besides its business activities, the group is extensively involved in welfare and philanthropic activities through Hashu Foundation, which is its implementation agency for implementing group's corporate social responsibility policy that is aligned with global sustainable development goals. Hashu Foundation's primary focus areas are economic empowerment, social development, environment, and climate change. So, should you wish to know more about Hashu Group and Hashu Foundation, then I'll encourage you to visit our website. Uh, this particular slide would give you an idea about how important procurement's contribution is when it is compared internally with the sales function towards the profitability of business. It very effectively shows that how a 10% of a decrease in procurement spend can equate to 25% increase on a sales or 5% increase in a sales price for a business to be able to hit a gross profit target of 150 million. The example should surely give all the procurement professionals attending this session a goosebump about how strategically important they are when it comes to deriving the profitability of the business. Uh, Here I've tried to identify the line items of the on both the asset and liability sides of the balance sheet, where procurement has got a significant impact, uh, such as these include trade and other payables, which are related to suppliers payment. Property, plants, and equipment has something to do with the capex, and then you have got stores and spares and stock in trade. Uh, on the profit and loss statement, uh, cost of goods sold, distribution and selling expenses, as well as administrative expenses are the areas where procurement creates a considerable impact. And in terms of driving down these expenses and increasing the gross profitability. This is one of the experts from the annual report, which is clearly reflecting the procurement's contribution in terms of savings and how did it support the business. Uh, mm, the procurement through robust sourcing strategy ensured reliable supplies while delivering savings of 4.8 billion rupees, which mitigated the cost implication posed by devaluating currency in a highly inflationary environment. This also allowed the company to provide the price relief to the consumer, uh, but equally allowed sustained investments behind their brand. So see how big the impact is. Of a job role being procurement professional on the company's financial statements. These are some of the self-explanatory reasons that drive organizations to save money. Uh, these includes pressure from your competition. It can be normal inflationary pressure. It can be due to your customer being sensitive to price. It can be the regulatory requirements that are supposed to be met by your company to serve your customers. It can be due to internal cost pressures. It can also be due to the shareholders' expectations. And lastly, it can be due to economic crisis, such as the one we are faced up with in shape of COVID-19. Uh, Before I hop on the core concepts, it's essential for us all to understand the dichotomy which exists across various business functions in terms of different interpretation of savings. It is equally important for procurement professionals to develop this understanding as it enables them to not only address this dilemma, uh, but can also be of a great support to them to ensure a unified interpretation when it comes to defining the savings. Here you can clearly see business managers defining savings as a direct expense reduction, which is reflected as a positive decrease in a budget. So in other words, for them, it's the saving against an approved budget. Finance managers on the other side uh, describe saving as an outcome of a pricing that is an improvement over previous year price. Uh, for them, the saving is something which is a reduction in a historical baseline. Procurement managers consider saving to be an incremental discount, which are negotiated from suppliers' first price or benchmark prices when these are multiplied by with the projected volumes. According to procurement community, saving is a differential amount between supplier's first quote and the negotiated quote. Uh, so the question now arises how exactly we define the savings. A saving is a financial measure of a reduction in expenditure compared to a defined baseline. The baseline is most of the times an existing price, um, but may also be a budgetary value, index, or estimate. Broadly speaking, savings are divided into two broader types. The first is the cost reductions and the second are the cost avoidances. The cost reductions are also commonly known as hard or cash savings, profit and loss savings, or a bottom line savings. The cost reduction refers to reduction in resources that are required to complete an activity or obtain an input compared to previous year, which is net of other costs associated with its implementation. These are the bottom line savings which can be tracked directly to the profit and loss with a positive impact to operating profit reflected as a reduction of expenses. Uh, the example may include reduction from last year price, improved payment terms or rebates. Uh, Cost avoidance on the other end are termed as soft or non-cash savings. The cost avoidance is a financial measure of resistance to unbudgeted, unplanned, or unexpected price increases that have not been considered in the baseline pricing assumptions. So it is the type of saving that does not actually lower the cost of product or service when compared against the previous year price, but it does minimize the negative impact to the bottom line that a lack of initiative would have generated. In other words, it is the price which is lower than the quoted price, but not lower than the previous year's price. These can exist either when we have no historical reference available to us, or in case even it does exist, but it might be too old to use. The example of cost avoidances can be uh, avoidance of any penalties, deferment of price increases which are agreed in a contract, or getting a product or service that has got improved features or better quality. So these are some of the common baselines which are used for calculated the savings. These are fairly self-explanatory in nature. So this is these are the baselines which at times most of the people use when they work out the saving calculations. Uh, so the savings are typically passed through these four phases. Identified savings are the opportunities basically identified through a structured analysis of existing spend base, benchmarks, industry best practices, and market intelligence. During this phase, you simply try to establish a saving pipeline with least consideration towards whether or not they are actually delivered. Projected savings are the savings potential when they are seen in the context of projected volumes. These are calculated by multiplying the existing baseline with the projected volumes. Contracted savings, also known as negotiated savings, refer to post-spend analysis upon completion of a strategic sourcing and negotiation process, which results into new negotiated price. So the contracted savings are calculated as the differential between the new price versus the old price, uh, for a given category. Realized savings is the last stage which a saving passes through. But here you should be very cautious about the fact that savings uh, are not considered valid until spending occurs. So this is the final phase where the savings are calculated when transaction is completely executed. The realized savings are measured as a difference between the negotiated price uh, multiplied by projected volumes compared to the actual volume spot. So having gone through these phases, my personal advice would be that your focus should be concentrated more towards realized savings when it comes to formally publishing them, as these are actually savings which are going to hit the bottom line. While the earlier three are more of a theoretical in nature, as they only help you in establishing the savings pipeline for your organization. So this particular slide gives you a fair idea about how and where do different phases of saving fit into the context when you run a category sourcing project. So this is equally important for you all to understand that during what stage uh, of the sourcing process you'll be, and you'll be hitting which stage of the which phase of the savings life cycle. Uh, this is one of the CEOs highlighting his concerns about the leakages in procurement saving. According to him, his procurement head is claiming 250 million euros in saving a year, but when upon being asked, he says that he doesn't know, and he assumes that divisions are compromising his savings with the spending increases and unauthorized maverick buys from the local suppliers. Uh, a recent survey data highlights that only 22% of the businesses focus on realized savings, while nearly 70% count contracted savings before spending actually occurred. The majority therefore thinks that they are deriving realized savings when in fact they are booking only contracted or negotiated savings that may not have realized fully, which is a very dangerous notion, as savings, unless not realized, are merely theoretical and cannot be traced to the bottom line. Uh, There can be numerous points of saving leakages, making it much more challenging to achieve realized saving once they are identified, projected, and contracted. Consider a spend category like travel. In this case, the buyer base is highly fragmented. For example, thousands of traveling employees from across the organizations. So these travelers may deliberately choose to use their favorite airline carrier rather than a preferred carrier. Or the policies may not be well communicated or enforced, leading employees to inadvertently use non-preferred carriers, which can be due to lack of awareness of policy. Problems can also arise on the carrier side, where pricing discount may not be properly applied, and the buyers at times are not well equipped to monitor carrier price compliance. All these factors combine to highlight the potential for savings leakage. This example also reinforces that counting savings at the point of contracting on is premature, as realized savings can considerably differ from the identified savings. So how do we prevent savings from getting leaked? All you need is to first develop a comprehensive policy governing the principles um, for reporting and calculating and capturing the savings. It should include the basic principles, the underlying assumptions, the calculation mechanisms, and the approval process. Then alignment and accountability is an important step towards achieving the realized saving, for ensuring that there is alignment between procurement and its stakeholders, that on how savings will be measured and counted. Getting everyone aligned on measuring realized saving is critical to achieving the cultural shift. Stakeholder engagement is imperative, uh, uh, is very imperative, uh, because they, being decision makers in each and every sourcing initiative, need to be ensured that they are fully supporting the outcomes. Engaging stakeholders in development of policies and processes also will help to control spending and drive compliance. Awareness and access. Once new or revised agreements have been put in place, all stakeholders need to know how to access these agreements and operate within the established policies. This involves working closely with the stakeholders and suppliers to execute category-specific implementation plan. These plans will vary in design depending on category, but should involve detailed communication and planning activities to be more effective. Proactive monitoring and management at the purchase order level is of critical importance. Once agreement have been put in place and fully communicated and implemented, it is crucial to establish proactive monitoring capability to identify and stop non-compliant purchases before they are approved and executed. Some organizations use combination of technology and procurement specialists to both stop non-compliant ordering and also to educate the end users. Saving measurements and reporting mechanisms aligned with the between procurement and finance team um, is equally important. Um, with the finance and procurement teams aligned on saving methodologies, communication and training completed, and proactive monitoring in place, procurement should rigorously uh, measure the spend, savings, and compliance to identify improvement opportunities. Detailed visibility to spend, realized savings um, realized savings and compliance at a category level, category, regional, or even site levels allows procurement to pinpoint any non-compliance and identified systematic issues. Further, it also provides a baseline to drive continuous improvement initiative and achieve a higher level of compliance. Lastly, you need to leverage your spend analytics in order to preempt any potential saving leakages by keeping an eye on the patterns, by running different spend reports, by running different analysis based on different scenarios. So this will help you in preventing the potential savings. Uh, Now let's come to the Hashoo's case study about the saving. So the grand challenge that we were faced up at the Hashoo group was that formal policy document on the saving didn't exist. There was a limited awareness across different business functions, both about the saving and its impact on the company's financials. Individuals had different perspective about savings on their definition, reporting methods, and their treatment. They had limited or almost negligible, non-existent kind of awareness about cost avoidance aspect of the saving and its impact. The lack of structured approach to measure and report the saving also existed. So how did we tackle this grand challenge? We worked out a saving guideline based on a global best practice. Then we created an alignment with major stakeholders in a cross-function setting involving operations, finance, internal controls, and even demonstrated somewhat of flexibility in incorporating any logical inputs to further refine. Then we conducted multiple training sessions across all the business units and functions and to make sure that people are aware of the new protocol. We also managed to integrate saving validations with the document approval process. So the savings and the document approval process now in Hashoo Group goes hand in hand rather than saving being approved in isolation and document being approved in another through another approval process. We also manage the stakeholders' interest by involving them in the process. We devised a reporting mechanism to track the performance by creating visibility and to uncover any non-conformance. We were successful in deploying an escalation mechanism to highlight any non-compliances. So the lesson learned from this episode were that try to refer to the global best practice because people tend to get more convinced when they see a particular thing or principle being practiced across the globe and across different industries. Don't forget to align your key stakeholders. Uh, Keep on creating the awareness or reinforcing the awareness level through trainings and refreshers. Keep a close watch on leakages that may occur between contracted savings and realized savings. Um, Collaborate internally with your stakeholders to reasonably accommodate their inputs in the policy development and gain credibility in terms of paying more attention on realization aspect of the saving. Uh, So with this, I've come to an end to my today's discussion. Thank you once again for attending this session. I'm optimistic enough that the insight you gained today will help you a long way in your future when it comes to, measuring and reporting the saving. Thank you very much. Thank you for attending and signing up for this session. Take care. Bye-bye.
Okay, thank you very much. This was great. Thank you for the speaker for sharing the insights. Very interesting content. So I wanted to quickly remind you that you can ask questions by using the comment sections at the bottom of that screen. You'll see that some of you already asked questions, so go ahead. The speaker is here. They will answer your questions live, but also after the live event. So feel free to come back and ask questions at any time. The next thing also I wanted to remind you quickly is about the Chain.net group we created on our online community, Chain.net. You should have received an invitation already for it. A private group discussion